Hey, what's going on? Welcome back to Risk Free Reward. And today I have a kind of live trade right now going on. I'm not actually in this trade, but I do want to kind of give some notice on what you should avoid as a trader in certain stocks, even though they look good, in certain plays, even though they look good. When it gets to particular levels, you should just avoid the stock altogether. And I'll give you a lot of factors on why you should do this. And I have a great example right now in front of me. This stock is HKD. I have no idea what they do. I have no idea what kind of catalyst it is. But just looking at it as a trader and kind of the stuff that's going on, what's happening in between this stock, some red flags really that you want to try to avoid when dealing with a stock. Let's jump right into it. All right, so we have HKD up on my screen here, and right now, as you can see today at the open, this thing opened at $158, and then it actually ran up to, now it's breaking out of the 300 range, and I'm expecting this thing to either fail here or go way higher, right? So now we're starting to come off. Now, the thing I'm telling you about this is this stock actually, let's go to the 15-minute chart. If we bag up, this stock actually just opened on the 17th, 15th of July, and it started around $10 or so, $11 or something like that. This stock has ran all the way up into $300 plus right now, right? Now, when we dissect this, of course, if somebody's pumping this up and like, yeah, HKD, you can make so much money on this thing. It's like I got in at $20, and now I got in at $20, and now it's ran up all the way to $300. I'm gonna be so rich. Follow me for more financial advice. Let's kind of dissect this thing. Now this thing can go higher because essentially it was a new IPO. There's basically air. We could look at the 4-hour chart if you want to go. Like, there's nothing to say to stop this stock, right? If it does break this 300 level, I'm expecting the next level to probably be 350, 400, something like that. But you don't know. It's basically air, right? So as a trader, if you could convince me a reason I should buy this at the top, right? The stock it's an IPO, right? What reason do you have to buy this here at the top? Like, I don't have a reason. No credible trader that I know has a reason to even play around in these areas. Now, if you were a short bias trader like myself, what reason do you have to short this thing right now? You really don't. Now, if I wanted to short this, right? So let's go back to the 3-minute chart so you guys can see this a little bit. Now, if I wanted to short this, my broker is asking $10 per share to short this thing. So I would have to pay my broker $10 per share to actually just borrow shares of this stock to hopefully get the short right. Now let's go into even further dissection. So if you wanted to short this stock, you're looking at the spread right here, bid and the ask. The spread right now is, what is that, $3? So it's $3 per share on the spread right now. Now, on top of that, you paying $8 per share to short, so that's $10, $11 plus slippage, which would be plus or minus wherever you're trying to enter, right? So you're probably risking about $20 per share risk on this stock. So if you wanted to take any size, let's just say you wanted to only take 10 shares of it, you'd still be down $20 per share on 10 shares at a deficit if you wanted to hold. Now the spread is, so now you're seeing the spread go from 320 all the way to 340, which is basically a $20 spread. Now it's tightening up a little bit again. If this stock decides to give up and rug pull, what we call it, a rug pull is essentially when they pull liquidity. Hey, we're making an offering because they raised so much capital off their stock. Hey, this stock went to from $12 to $400, you think they're not going to take some capital and stuff out, and they're not going to make an offering to reserve and pull capital? I think you would be insane to believe they wouldn't do that. But let's just say they don't do this, and this thing decides to give up the ghost, right? Which it will eventually, right? When this thing finally decides to come down, you should be expecting this thing to fall like a rock. This is a stock that simply does not have enough information, enough liquidity type of basis to stand on for you to be trying to go long here at the top, right? And the risk to reward on the short end of the stick, right, is just minuscule. Like it's overbearing. Where do you start the short? There's nowhere to start the short because you're essentially shorting against air. You're way up here on the long. What are you getting in against, right? Now let's just say the stock came back to 241. Maybe you can give it a try, right? But until then, where are you going with this, right? So essentially, a lot of people accounts are going to be blown on this thing. I don't know one credible trader that I have talked to today, in these previous days, and especially today, and even on day trading shows, they are avoiding this stock. It's certain things that you just want to avoid. Like, yeah, if you would have got the 240 to 350 breakout, you would have got $100 per share. YOLO, right? But is the risk really there? If, let's just say, it goes to 400, right? And you get in at the 400 break, and the 400 break ends up coming all the way back down to 180 or 200. Then you lost $200 per share. Are you willing to sacrifice that? And even if you had a stop in, are you willing to give up $20 to $25 per share with slippage? And you're not really willing to give up this type of risk. This is something that I haven't even looked at because I heard it was running from $12 to all the way up to $35. I didn't take a look at it. Then it ran from 20 to 70, $80. I really didn't look at it, right? Because I just wasn't interested. I'm not interested in IPOs enough in this market setting to feel like I want to trade an IPO in this market setting. And it's like, it's a bear market rally. You know, you're going to get stuff like this that's going to run, and it's going to blow people's head off. And as crazy as this is, as crazy as this thing looks, it's a 3-minute chart that's literally wicking down, wicking back up, wicking down. So if you had a stop, so say you got in on this breakout, it wicks down, stops you out. What that is, $10 out the money? It stops you out $10 out the money. So now you lose $10. Now look, whoever bought this top, 371, they're already getting plugged $40 per share. It's not a type of thing that you want to trade, man. This is way too risky. Stay away from these type of stocks when you see them, unless they have a lot of information for you to go on. So, for example, let's talk about something like Archon. Now, this thing isn't moving right now, right? And I could try to pick something better, but I use Archon. Now, as you can see, this is what Chinese stock. This is Archon. This thing has some decent information. It's been trading since 2010, etc., blah, blah, right? When this thing is on a run and it's on a tear, you get these big, huge spikes up, right? You get these big run-ups, and then you get these huge capitulations. Now, traders, more experienced traders are going to see this and say, I'll give it room to run. I'll let it breathe. Let's see what it does. They'll let it run up to the top. And a short bias trader like myself, I'm always getting short on these things. I'm never getting long on these, right? So I'm always getting short on these, right? So, but this has the information. Pump and dump, pump and dump, pump and dump, right? Pump and dump. So these are the things that you want to try to avoid, right? You want to avoid these type of stocks, right? Unless you know what you're doing with these. But me, I would be getting short around these areas. You see this? This is a level right here, around that 17. This is a level, a pump and dump level, right? So if it got back up to 17, you could probably take a short. If you get ran over on a short, get out, risk $1 or 50 cents or whatever you're gonna risk, and try to short again here at 27 is the next level that you're gonna have, right? Probably like 22 to 27. So because this has more information, this will be a more valid run up. But you're knowing that this archon is a pump and dump stock. When you look at something like HKD back again, where's your out? Where's your, like, where do you get out of this thing? Where do you start the short? Where do you get long on this thing? It's no kind of indications on what you should do, right? So with that in mind, just stay away from stuff like this. Not financial advice. Obviously, I'm not a financial advisor. I'm just trying to keep you guys from buying something that somebody else is promoting or pumping up, and they're basically, you're buying it, they're getting out, right? So don't trade this thing. Not financial advice, but stay away from it, and this is how you keep your money in your account. If you have any questions, comments, concerns, or anything you feel like I was wrong about, or any type of situation that you disagree with or agree with, go ahead, drop in the comment section below. And as always, I will see you in the next one.